This particular role has a visibility all across the value chain. So starting from user journey, so the role is able to influence that how exactly users should get embedded within the organization, the customer onboarding piece that I'm talking about. Post that, there is an ability to influence the credit algorithms and the way credit underwriting risk should be undertaken through the data availability slash the fintech ecosystem that this country has developed uh, so fortunately over last 4 to 5 years. Post that, there is always a leg of what exactly servicing is to be done, because generally the loans are long-term in nature and you require to appropriately fulfill customer service needs as and when they occur, and hence the role also has ability to do that. Last but not the least, understanding the customer behavior, understanding their personas, and how no, they should interact with the organization from a lending viewpoint. So since this role has no, within its ambit all those four avenues, it basically acts as like a glue between the analytics, technology, and your digital journeys, if I may say so. It will be a bit unfair to say that financial services have data in silos. Perhaps this is no longer true for most of the organizations. Most of the financial services company, since you're taking credit risk or over a longer horizon, and hence actually understanding a customer behavior plays a big role, and hence we all have been forced to sort out our data problems. The way it gets used is that either from a credit lending perspective or from an identification perspective, that whom should you be lending. All these things is today data enabled itself, and not only for LTFS, for most of the large players of this industry. And hence perhaps a bit unfair to say yes, these things are always WIP, that you can always be better than whatever you were yesterday, and that's what the attempt of all the industry players is. However, there are certain aspects which perhaps are missing from a ecosystem perspective. Say, for example, the recent initiative of account aggregator. Data in silos would also mean data in various organizations. If it can come together, then it helps customers. Those initiatives have not exactly taken as much positive momentum as one would like to see. But I guess as a nation itself, we are a work in progress nation, and we'll see end of that as well. If those things get sorted out, then from a customer perspective, the cost of onboarding for all financial services player is likely to come down, which in turn will get benefited for the customer itself through lower rate of interest environment. Actually, especially it is much more truer for rural sector, because there your cost of acquisition is a bit higher vis-a-vis the urban sector, and for them it will be far more beneficial. So just to sum it, that means within the organization, I don't think we are still in a stage where data is in silos. But financial ecosystem is built of so many players, and if those data points also starts coming together, then we can find much better value. Case example, bureau. That before the advent of bureau, basically the credit risk was a bit playing in blind. But simply because all the lenders are able to aggregate their data at one point of time, it has given ability to everyone to take better informed decisions. Similar is the expectation from account aggregator as well. So I guess for most of the players, once again, let me tell on behalf of most of the industry players, we are no longer much into paper anyway. At least for products where it can be removed. Platforms like Aadhaar has enabled KYC to be completely digitized. Platforms like eSign, which is also based on Aadhaar, has allowed people to sign the documents digitally. Fintechs like Perfios and the likes have allowed financial statement analyzer to come together in a digital format and enable it. So I guess most of the players have moved beyond paper-based thing. There are certain products where these challenges still lie. Case in point being home loans. because that ecosystem is still not digitized. That's a WIP from the government perspective itself, and that gets sorted out. That would also get cleaned up. The benefit, the core benefit it gives is that the cost of operations of the organization starts coming down, uh, and that in turn helps the overall credit growth, helps the overall rate environment in which we play with. Even more important now, when we see a rising interest rate environment, that all sorts of inefficiencies from the financial ecosystem has to be taken out, so that the rate of interest does not in toto get passed on to the customer. There is something which gets absorbed through better efficiencies, and that's the way industry is also moving towards. But paper based lending, I guess COVID helped in that. It fast tracked everyone's journey uh, to become paperless. Once again, it is means it has been to a large extent mitigated. I will tell you how. For a large player like us, who has been in this industry for way too long, we have seen various cycles through which this agriculture industry goes through, and the behavior of underlying customers over a period of time. So we have our proprietary algorithms to take care of that. That is one aspect. Second aspect is that the ability to collect becomes a very important phenomena as far as rural lending is concerned, and most of the players invest a bit on the creating that particular ability. Third is that even in agricultural sector, there are opportunities to digitize the process, like the way we do. Say for example, we are a decent size tractor financier. In fact, we happen to be the market leader as far as tractor financing is concerned. Our process is digitized, by the way. Okay, through the combination of proprietary algorithms, technology intervention is in terms of that if you want to do FI, then there is going to be geotagging, real time moving photos will flow out, a bit of AI on top of those photographs to understand what exactly those photographs mean, and then converting all these algorithms to your credit decision. Yes, there is always a portion of manual overlay which remains, but large amount of guidance gets provided by these interventions. So I guess we are far better off vis-a-vis the pre-COVID era, even in the agriculture sector. Another aspect which has helped is that through this Aadhaar-based subsidy or Aadhaar-linked subsidy, uh, agriculture sector also is not exactly data blind anymore. From a user's perspective as well, they are also equally worst, if not better, than urban consumers from using smartphones and stuff like that, finding information from that, as well as the digital footprint that all these subsidies leave behind in terms of accounts verification. All those things are available. So ecosystem itself has developed a lot over last 3 to 4 years. Let me give answers on two aspects. One is a bit philosophical aspect, that if as a lender we are not using that data to provide either a better offer or better experience, then we have no right to take that data from the customer. The second aspect is the security aspect, that if we are not able to take due care of that uh, data, and if in case we get breached, this is the business of trust, right? And this is a new form of trust. If we are not able to do our bit as far as that trust building is concerned, then once again we do not have any right to be holder or be fiduciary holder of their data. I guess government's data protection bill is going to enable uh, a very evolved playground, if I may say so, or a evolved landscape, if I may say so, where all these questions will get addressed and customers will start getting the due for the data that they share. I guess from a financial services perspective, there are two line items which makes absolute sense for them to curtail. One is on the cost of operations, and hence technological interventions will always be aimed at those things in terms of how better to onboard, how faster to onboard, how better to service. Can we do it autonomously? Can it be a trigger based servicing instead of customer asking for a service, so that your cost of operations starts coming down, and as an organization when it starts becoming much more competitive. The second aspect is around credit risks that people take. More or more data availability reduces the chances of unknown, and hence it gives financiers an ability to take the credit decisions far better. If you would have observed, and you guys are much better into the market to understand this, is that post COVID, the credit growth of India has gone much beyond whatever was their pre COVID era. And in a way, we have to be thankful to COVID because it helped digitize various forms of transactions which happens, which allows more visibility. So it has gone into a that loop, self-fulfilling loop, where every passing loop is better than the other one. And I guess we are well versed or well on the path of becoming better and better as the year progresses. Even from a credit risk perspective, India's NPA at a macro level has been sequentially coming down in spite of COVID, whether it's a large ticket lending or a retail lending. So all those things are playing out, and I guess we will only see better days for financial services.